Good evening to everyone. I can see quite a good chunk of you are on the dot, already joining in. Welcome. Welcome all. We'll be starting this webinar in the next minute or so. Actually, almost at 100 participants. Good timekeeping. Let's just give it 1 minute for a few more people to join in, and then we will get this discussion underway. Thank you. It's very good to see a lot of you are interested in how you can make passive income and grow your wealth. If you have any questions, please feel free to write them on the chat box, and then we'll be sampling them as we get along with the discussion. I think we have quite a good number to start off with, so I'd like us to get this webinar started, and then the rest can join in as we go along. So good evening again to everyone, and welcome to this session, this webinar, where we're going to be talking about creating wealth baskets using CIC money market funds. We're very delighted that Aloojani is hosting this webinar. And we are just here to learn how we can grow our assets, how we can grow our wealth. Now, just to give you a little background about this webinar, it's being hosted by Aloojani, and Aloojani is in its 50-second masterclass. And I want to tell you one thing. Please mark these words, and at the end of this webinar, please keep them and act on it. Now, Aloojani has a 1 milli challenge, and what that is that it's a challenge to you. Everybody in their community is challenged to grow their wealth to the point of 1 million shillings. Now, at first, sometimes it sounds very huge, like if you're at a part where you're not even saving, you think, how will I ever get to 1 million? But it starts with you taking the step. And that's why we brought on CIC Asset Management today to tell us about how we can grow our wealth using passive income. They're going to tell us all about money market funds and how we can grow using them. So please keep it in mind that that 1 million is not as distant as it looks. So this is going to be an exciting session. So as we always do with Aloojani, we bring you reputable firms who are going to help you build your wealth. And I'd like to introduce our panelists for tonight. Today, we're very happy to have Humphrey Kadungu, who is the Managing Director at CIC Asset Management. Welcome, Humphrey. And we also have Moses Katiwa, who is the Business Development Lead at CIC Asset Management. Welcome to you, Moses.
Thank you.
And then we also have our hosts for tonight. That's Aloojani Investment, who is led by the CEO, Robert Ochieng. Hello, Robert, and welcome.
Hi, Claire. Thank you.
Welcome. Now, I'll be your moderator for this session. My name is Claire Munde, and I'd like us to get started with this session. And I want us to understand a little bit about CIC Group and CIC Asset Management, and then we'll go down to how we can create wealth using different wealth baskets. So I'd like to start this conversation with you, Humphrey, and I'd like you to tell us a little bit about the heritage of CIC Group as a whole and also CIC Asset Management, and then we can take it forward from there.
Thank you, Claire. CIC Group is an interesting group that has been around for quite a number of years. Essentially, we are insurance and financial services group. We offer all lines of insurance from life to general to medical, so pretty much a full service insurance company. And as part of the group, we have CIC Asset Managers who are part of the group. And the interesting thing about CIC Asset Management is that if you look at the asset management industry, we were incorporated fairly recently in we began operations in 2011, and we've had rapid growth. We are currently having over 100,000 customers with assets under management, basically the portfolio that we manage that is in excess of 145 billion Kenya shillings. We are also the most profitable fund manager, and we're also a market leader with unit trusts with a market share of about 35%. One unique thing about CIC Group is the fact that amongst our key shareholders is the cooperative movement. So if you're a member of a SACCO, chances are that your SACCO is a shareholder of CIC Group and consequently CIC Asset Management. Thank you, Claire.
Thank you for that. And I think one of the things that has stood out for me there is that you're a market leader, taking 35% of the market share, which is very important. And it tells us a lot about the kind of trust that people have in this company and also the kind of assets under management by CIC Asset Management. Thank you for that. Now, I'd like us to get to know you a little bit better. And I'd like to you to share with us your career journey. Tell us your career journey and specifically your investment journey. When did you start understanding the power of building assets and growing your financial assets and the importance of doing it as you go towards retirement? Because very many times people think of retirement as that thing that is so far away. So when you start your career, you think, I've just started, I have so many decades to come, but it's really important to think of that end game and start accumulating your assets. So please tell us a little bit about your investment journey.
Thank you, Claire. So my career in investment started quite a while back, I think around 2003, when I've always been interested and passionate about investments. And I then decided to do a qualification that at that time was quite rare. This is a CFA, Chartered Financial Analyst. And I can say that that I think was pretty much the turning point in my life. And in this investment journey, I could see the power of being able to, look forward and make decisions about the little money that you have today. That has propelled me in my career. I've been privileged to work in Kenya, in South Africa, in certain frontier markets around the African continent, and I have seen what investments, what savings, what putting a wealth basket together can do. I'm now back in Kenya after having worked out of the country for quite a while, almost about 10 years. And the interesting thing about Kenya is that Kenya is a nascent and growing market. So there are lots of opportunities for people to be investment savvy and to be able to manage their finances.
Okay, thank you so much for that. I think what you said is quite important, that you saw the power of investment. So you started to build your journey, and then coming back to Kenya, you saw the opportunities. So we want to know about those opportunities that exist in Kenya, and we want to know how we can grow our wealth to that level that we'd like to. Because as I said earlier, sometimes it looks like such a huge thing. You have these dreams and aspirations, but you just don't know where to start. So you end up not starting. So we want to help you start that journey slowly by slowly and accumulate your wealth baskets. And you've been hearing us talking about wealth baskets quite a bit. So as the webinar proceeds, you will get to understand what kinds of different wealth baskets exist and what is right for you. Remember that personal finance is personal. So what you need is different from what I need, but how can you use all those wealth baskets to make sure you get the best out of your investment? Now, Humphrey, I'd still like us to talk a little bit about how professionals and entrepreneurs can create different ways of making passive income. People who are in the formal employment, people who are in business, there are very many different dynamics that exist. So what can you tell these people for these different groups, the professionals, the people who are entrepreneurs, who have different kinds of income coming in at different times? What can you tell them about creating passive income?
Thank you, Claire. Great question there. I think just to set the scene, I think we're living in a very volatile environment where we're seeing, depreciating currency and being an import-led economy where pretty much everything is imported into Kenya. That's having quite a significant impact on inflation. We're seeing high interest rates coming up. Unprecedented actually, and of course rising inflation. We're seeing all fuel prices. So what do you do about this? I think it's key to be able to distinguish between your needs and wants, to review your budget and prioritize needs, and as well as diversify your investment. So these are basic things that one needs to do. And it starts essentially by budgeting. So ensure your income and your expenses are actually matching. And that's the first and most important thing that you need to do. And this also teaches you to live within your means. And most importantly, not to get trapped in a debt cycle or in an inflation or lifestyle creep. So when you get a salary hike and you then expand your lifestyle to accommodate the new income that you've gotten. So that is quite important, to be able to live within your means. And what I found that works over time is what you call the 50-30-20 rule, where you'll say about 50% of your income should go towards, your needs and essential things like, housing, utilities, and so on. And then about 30% on more wants and that kind of thing, fun things. And then about 20% of income should go towards savings. And in actual fact, this 20% is what you should actually start with. And there's something I like telling both salaried people and entrepreneurs, is that you need to pay yourself first. When you get an income, you need to pay yourself first. And whatever you put aside as a saving is essentially money that you're paying yourself. Saving is essentially deferred income. You're deferring your income to a future point, and you're sacrificing today's needs to meet future needs. So it's a very, very powerful thing that you'll need to do, which is pay yourself first. It's also important to evaluate your standard of living, set financial goals, and that is perhaps a very, very key item. Financial goals. This essentially is what sets your investment objective. What is it that you want to achieve in your career, in your life? What would make you happy? And when you work towards that, that will enable you to prioritize these particular goals and be able to determine what is your needs and your necessity. Something else I find very powerful, and I think some of us may have seen this before, is what we call a cash flow quadrant. And essentially, this tells you that on the left side, you've got basically active sources of income. Most of us are in this side. You can either be an employee or you can be self-employed. Or on the left, on the right-hand side, you can either be a business owner or an investor. Now, on the right, you've got passive sources of income, and on the left, you've got active sources of income. And the unique thing about the left side is that you make money by donating your time, by giving your time, by trading your time to your employer. And in return for that time, you get money. And then self-employed. And there's a trap that a lot of people get into, where maybe you're a professional, you're a doctor, you run a practice or a lawyer, and you think that you have a business. But the reality is that you're also donating your time. And the key to determine the difference is, if you did not go to your practice today, would everything still run? If you didn't come for a month, would everything still be okay? If the answer is no, then that will tell you that you're still on the active side. And to move to the passive side, essentially, you need to come to the bottom side, where you have an investor. And this is a really, really powerful place to be. Here, you have your money now working for you. And that leads us to the other key point that we'd like to bring, which is the concept of active versus passive income. And on the active income side, it's compensation for work actively performed. But obviously, on the passive side, it's your time and your money that is working for you. And the freedom here is unlimited. So imagine if you're earning 100,000 shillings or 50,000 shillings a month. What if you had investments that give you a monthly income of 50,000 shillings, equal to your salary? It means that you've got freedom to do whatever it is that you need to do. It means that you've got what you call financial freedom, and that is really a very, very powerful thing. A specific thing for entrepreneurs, a lot of entrepreneurs tend to be very, very concentrated. Their portfolio, if you look at their portfolios, they tend to be very, very concentrated in their business. And the key message for them is that you need to diversify away from your business, and you need to separate yourself from your business. So you're the owner of the business. The business, of course, earns a certain return, Now, you need to separate it by perhaps having your business pay you either a salary or a dividend, and that is then what you invest in assets for yourself to create that particular passive income. So this is one key pitfall that a lot of entrepreneurs have, where they say that I'm running a business which is giving me a good return, but if you ask them, what about you as an individual? What assets, what passive income do you have for that? Everything is tied up to the business. So it's quite important to be able to separate. And I think all this leads us to this point, which is we like to call this FIRE. Financial independence, retire early. And here by retire, we're not talking about your 60s and 70s and you retire to the village. We're talking about even in your 30s and 40s, if you achieve financial independence. And this is essentially having enough income, enough passive income to meet your daily and ongoing needs. The minute you have that, you have a lot of financial freedom, and essentially you have your time really available to you. And that is quite powerful in the sense that you can then do whatever it is that is really, really passionate to yourself. And then lastly, Claire, is about risk profile. This is again very, very important. And you of course have a balance between risk and return. And the more risk you take, of course, the more return you earn. And investments and saving is really a balance between those two. And you should have a mixture of that. So you should have your short-term instruments, such as our money market, unit trust, that give you a good and stable return, but also liquid and readily available to you. Back to you, Claire.
Okay, thank you for that. Some very powerful points that you've put there, and I'd like us to just sit down and think about that cash flow quadrant. You know, sometimes you read these books, like that book by Robert Kiyosaki about that cash flow quadrant. If we could go back to that slide, kindly evaluate yourself. If you have that business, are you self-employed or are you a business owner? Are you thinking that you're getting passive income, but really you're in the active side? Just the way Humphrey has told us, sit down and think, if I don't go to that work tomorrow, will I be able to make money? Will I get money? So really evaluate where you are in that cash flow quadrant to know whether you're getting it as active income or passive income. And there's also something else you've talked about, Humphrey, that I'd like us to really discuss. You've talked about budgeting, and it's important. That's the start point. If you don't know what you're spending your money on, how are you going to be able to put your money together? Now, this thing that you talked about, the lifestyle creep, and needs versus wants. Now, that is where there's usually a blurry state of affairs. How do we really get down to distinguishing between what are our needs versus what are our wants? Because for some people, you'll say, you know what, I really need to go to the gym every month. I need that membership. It's not a want, it's a need, because it's really important for my mental health. And for somebody else, they'll say, okay, if I have that gym membership, I can cancel it and I can divert that money that I've been putting into that gym membership to the CIC asset money market fund. So how do we really go down to distinguishing between what is a real need and what is a want?
Thank you. Great question there. Great question there. And what I would look is, as we're saying in this slide, is that you need to evaluate what it is that your objective is. What do you want to achieve? And from there, everything then flows. When you have an objective, a clear objective, and a clear plan, then you will not be swayed by fads that are coming up, investment opportunities or hot tips. You know that my plan is to buy a house in 2 years, in 5 years. In order to do that, I need to put aside X amount of money diligently every month to lead up to that particular goal. So anything else that comes that does not quite evaluate or meet or fit into that profile, you will reject. And then the other thing as well, in evaluating the standard of living and what essentially makes you happy, that will determine, as you rightly put it, for some, gym membership is a must. It helps them, keep a proper mental health outlook. For others, it's a luxury. So there's no one size fits all for that. But what's important to note here, Claire, is the fact that evaluating what other people are doing and how they're living is really, really one of the biggest causes of that lifestyle creep. Because for some, for instance, may have what we think or see is a flashy car that they use to move around. And maybe the job requires, maybe you're a salesman, you need to go and visit other people. But for yourself, you work from home, you don't need essentially all these things. So you'll see that then that means that what is important to one person is really not important to the other. And all these things, essentially, once you have that plan, you're able to then prioritize what it is that I need to do to be able to achieve my goal. Essentially, everyone should want to get to a point of financial independence. And like I said, financial independence is a point where your passive income exceeds your active income. And that really unlocks the greatest thing in this life, which is time. Time is the greatest asset that you have. And the more you're donating your time to other people, if you look at this thing, this graph here, the people on the left are donating their time in return for money. The people on the right are in a system where, one, their money is working for them, and two, they've employed other people to work for them. Therefore, other people are donating their time to you. So even if you're employed, if you can get to the bottom right where you're an investor, then you're having your money working for you, and essentially you're buying your future time to do whatever it is that makes you happy. Claire?
Okay, thank you for that. And I think what you've said, time is your greatest asset, and you really have to know what your goals are. Different people have different goals. And just like the way Aloojani usually says, personal finance is personal. So whether I'm saving for education, somebody else is saving for the house, know your goal, and then that will determine how you go about your investment journey. So thank you for that. Now, I'd like us to talk a little bit about the CIC Money Market Fund. You know, right now, a lot of people, you talked about the different spheres. You need to diversify your portfolio and put some in the low risk, some in the medium risk, some in the high risk, depending on the returns that you want. But a lot of people usually fear about their money. How safe is my money? And that's where the issue of regulation comes. So I'd like you to talk to us a little bit, Humphrey, about CIC Asset Management and the Money Market Fund. Tell us, is it regulated? And if so, who is it regulated by? Because this is a very important question that sometimes people end up burning their fingers, and then later on they find out, oh, it was not regulated. So tell us about the importance of regulation and who the fund we are trying to invest in should be regulated by.
Our fund is regulated by the Capital Markets Authority. So we are both licensed and regulated by the CMA, Capital Markets Authority. And in there's a certain level of standard that you need to meet, from systems to employee training to ethics, code of ethics and conduct, the capital required to set up a business. So that essentially gives you a stamp of approval that there's a financial regulator that is overseeing our actions and activities. And they go down to the nitty-gritties of ensuring that whatever is in the portfolio is also safe, is secure, is aligned to the investment objective of the particular fund that we're investing in.
Okay, thank you for that. Now, for our listeners, you might be asking yourself why I started with that question of regulation. I think it's one of the most important things. Before we even think about where we're investing our money, we need to be assured of regulation, and regulation by the CMA, the Capital Markets Authority. So as you've heard from Humphrey, that they are regulated by the Capital Markets Authority, and with that comes a lot of regulations, issues of ethics and whatnot. So that is an important thing to think about even before you start investing, even before you think about which money market fund is best for me. You need to understand that regulation is key. So thank you for that, Humphrey. Now, I'd like us to, before we get down to the nitty-gritty of money market funds, which money market funds are being offered by CIC, how exactly do they work? How do we get our interest? How is it compounded? I'd like you to speak a little bit about people in the diaspora. We have many people who tune in and listen into Aloojani webinars from as far as London and all over the African continent, far and wide. Now, for people who are listening from the diaspora and they're wondering, okay, I'm hearing about CIC money market funds, I'm hearing about CIC asset management. can I be able to invest from wherever I am out of the country?
Absolutely. As part of our offering is a dollar money market fund. And maybe just to position why US dollars? I think this year has been unprecedented in terms of the depreciation that we've seen in US dollar versus the Kenya shilling. Year to date, we've actually seen a 20% depreciation of the Kenya shilling. And if you go back in history, that goes even a little bit more than that. And what that then tells you is that being able to protect your investment by investing in a hard currency such as dollars is also a very, very powerful thing. Now, who should do this? As you said, people in the diaspora already earning in hard currency, they'll want to protect and invest in a currency that is safe, secure, that is not prone to depreciation. This will be a great, great opportunity for them. You've also got even Kenyans who are, one, worried about that depreciation of the Kenya shilling. Two, you've got guys who perhaps would like to take a holiday out of the country. You'll end up paying for it again in a hard currency. Therefore, if you intend to do that, great idea to invest in the hard currency in the first place. And then thirdly, you've got entrepreneurs who import their stock, their goods from abroad. Of course, this is something that you pay in hard currency. And then you've got others who even sell and export and get paid in hard currency, in dollars. So you want to, again, be invested in that particular currency. All these things meet a condition what we call matching, where you're matching your income and expenses, the currency of your expenditure and the currency of your earning. That is a very, very powerful thing to do. And if you look at the graph on the right, where you're looking at indicative shilling yields and indicative dollar yields, you'll see that the dollar yield is, of course, lower than the shilling yield. In fact, the difference is 5.48%. And somebody may think, no, but I'm getting a higher return in dollars. What you then need to factor in is the shilling dollar depreciation. So year to date, we've had a 20% depreciation in the dollar. If you add that to the dollar return of 5.5%, essentially you're getting a return of 25% just by being in dollars. And as you can see, that is much, much bigger, actually more than double what you earn by staying in Kenya shillings. So again, very, very useful product, not only for people in the diaspora, but also those who have dollar obligations or simply who want to protect their purchasing power by investing in a hard currency. Claire.
Okay, thank you for that. And thank you for clarifying on that issue of the difference, because there's a tendency of many people sometimes to just look at raw figures. You're looking at the Kenya shilling money market fund at 11.02, then you're looking at the USD MMF at 5.54%, and then you just make your decision based on that. You think, oh, Kenya shillings is where it's at, but you have really clarified to us about the role of the depreciation. And so you have to think about it holistically, really holistically. So thank you for that. Now, I'd like us to now dive in to the CIC money market funds. You've talked to us about the dollar fund a little bit, but there are so many other products that are there. And now I'd like to rope in Moses to start telling us a little bit more about the different money market funds that are available for different people who have different goals. And so maybe a good place to start, Moses, would be just tell us a little bit more about the CIC money market fund and how it works. And what is a money market fund, first of all, for that person who is just thinking like, okay, I know or I've heard that a money market fund is a good place to get passive income, but just explain it in simple terms for all our listeners, and then tell us more about the CIC money market fund and how exactly does it work.
Okay, thank you very much, Claire. And thank you for having us tonight. A money market fund is basically a mixture of debt instruments. This is basically, we are talking about a mixture of bank deposits, treasury bills, and near cash holdings that are invested in the Kenya market. So a mixture of these assets is what makes a money market fund. And basically, this fund is meant to earn you interest the interest is calculated on a daily basis, and at the end of the month, the interest is compounded. So looking at a stretch period of 12 months, having invested at the current rate, you get that you earn an interest of 11.02% per annum. Further to this, your interest will attract a withholding tax that is charged at 15%. But for cooperatives, this does not apply. So this applies to retail clients and other corporates and joint account holders. So for you to join this fund, you're not required to basically pay anything. It's a product that is offered free of charge, and with the flexibility that comes to this fund, you can top up your funds on a regular basis, and you can also recall your funds on a short notice by way of giving us written instructions or using our electronic platforms like a website or a mobile app to give us instructions, upon which we'll now execute instructions, and within 2 to 4 working days, the money should be back in your bank account. You only need a minimum of 5,000 shillings to start. You can top up whenever you have additional funds with a minimum of 1,000 shillings. On both cases, there are no limits. You can put in as much as you have.
Okay, thank you. Thank you for that. And I think some of the things that have already caught my ear are the low risk, and then the early easy withdrawal, and also the fact that you are diversifying in quite a number of things. So I'll let you continue, and then we will continue on that matter. And then the no initial fees charged. Take note of that. I think these are some of the factors that a lot of investors think of before investing. Am I going to be charged something just to join this fund? Am I going to have to pay something? Are there any hidden fees? So that's good to know.
All right. Thank you, Claire. Now, one of the basic requirements, or rather, the reasons why we have a money market fund in place is, one, to preserve our clients' wealth. By this, I mean that by you bringing your money to a money market fund, then your principal is safe and secure. And the only thing that will ever happen to your principal is a gain. Rather, what I'm saying is that there's no point in time you'll find that your fund has gone below what you had invested. This simply because even without you topping up on your investment, then we are saying that your fund grows organically by way of you earning interest that is reinvested to your principal the following month. And this basically means every new month, even without your intervention, you'll have a new principal, and you'll continue growing your fund organically. Number two, this fund is meant to protect your money from the effect of inflation. As you've seen from our past performance and even current performance, the fund is outperforming the current rate of inflation. And so this means your wealth is preserved to the current standards. And just like I had said, we do this by way of exposing your money to bank deposits, treasury bills, near cash holdings, etc. So I have done a projection here just for a discussion tonight. And I projected a sum of 1 million shillings. And this is where now I'm talking about you've just put in your money, there's no top up you've done, but your fund will continue earning you interest. Taking, for example, a sum of 1 million shillings invested for a straight period of 12 months, even without your intervention, the fund has already grown by 110,000 shillings for the entire period of 12 months. And this represents an interest of 11.02%. You can see from my projection here, I haven't factored in withholding tax. So withholding tax would be 15% of the 110,000 shillings. So at the end of the day, you'll have your money as a principal of 1 million shillings plus about 90,000 shillings in return. So you'll have a net return of roughly 1,090,000 shillings, sorry. So how can we use our money market funds? Number one, we can use this money for taking care of financial emergency needs. And these can come in many forms, just sorting out, say, medical bills that came unexpectedly or exceeded your medical cover limits. You can use it for operational expenses. Looking at my slide behind, you can see that out of 1 million shillings, with a net of about 90,000 shillings, you can take care of small expenses if you're in business, and that goes a long way in also preserving the wealth that you generate on a daily basis from your business. Most of us have got money that we are not intending to deploy into any project in the near future. So instead of this money sitting in your account or in your M-Pesa wallet where you're likely to spend it on unplanned or unbudgeted expenses, then you bring it to a money market fund and will invest it on your behalf. And at the time when you need to deploy this money, you just need to give us notice to withdraw your money, on which within 2 to 4 working days, the money should be in your bank account. Some of us might use this money for saving for a project. Say someone is intending to just get a parcel of land that they intend to build, say their retirement home or their family home here in the capital. So you can use this money to slowly accumulate funds for you to be able to just acquire that parcel of land without you going to borrow from a financial institution to address that particular need. Some institutions, for example, cooperative societies, will use this fund to set aside money on a monthly basis or whenever they have some surplus funds from their core business, just to provision for dividend payouts, which are done within the first half of the year. And so this is a good vehicle for our cooperative clients who would want to have a way of mobilizing funds for just taking care of their dividend payouts. What else can I say? You can also use this as your default savings account. Like I said before, money that is not budgeted for in your pocket is as good as spent. So money that you haven't planned for it is good for you to just bring it to us and invest it on your behalf. As you can see there, I've done a pictorial demonstration of how you can basically use a money market fund to achieve your set goals in life. One being education. You can use a money market fund to set up an education fund for your children. We spoke about emergencies, where you can use this fund for taking care of upcoming and planned expenses. You can also use it to purchase items that you feel you can slowly just get to acquire without going for a loan with the financial institution. We can also use our money market fund with an eye to starting a business. You can slowly start accumulating your capital by way of just setting aside a specific amount of money, depending on how much you want to just set aside for your startup. You can also use this for a sinking fund. A sinking fund is basically a fund that we set aside for upcoming expected needs. Say, one, you might be having a loan that you service, say, on a quarterly basis or on a monthly basis. So you can use this fund to just set aside money to take care of these expected needs. We all want to obviously retire comfortably, and there are so many ways we can retire. You can retire by just having a business that you had an idea for a long time. You can just decide to take a holiday. You can decide to just take it easy back home. So when in retirement, you obviously need money. So you can use this money market fund to continuously set aside money that you can use as a stream of income once you proceed on retirement. So just looking at a historic performance of our fund over the last 10 years. And what you can get from this fund is that CIC Money Market Fund has been a very stable fund over time. Of course, we've had these oscillations of interest rates going either downwards or upwards. But one thing for sure, you can see this fund has remained steady. And one of the basic purposes of a money market fund is to generate that steady income over time. And I think from this chart, you can see that we've well achieved that. Consistent return. So what am I saying? I'm saying that this fund, once you come into this fund, you do not expect oscillations from time to time. And you can be sure of a guaranteed income that oscillates between 11% and 12% going forward. MD spoke about the return on the money market fund. Of course, this fund has been in operation for the last 3 years. And you can see 2023 has been the best year. Our fund delivering a return of almost 6% per annum. And I think this is a very competitive return by all standards that our clients and our participants this evening should consider participating in. Talking about our market share, of course, like MD said, this is a fairly new company. We are now on our 12th year. And you can see we've been able to just get ahead of the pack, especially in the last 7 years. We've tried to be the best in the market and will continue to be the best in the market. Of course, with all due respect to other competitors there, it shows you that there's something we are doing different from them. And this is something that I would actually want us to internalize even as we look for an investment partner out there. One, look at the experience of this particular particular fund management company that you'd want to partner with to grow your wealth. You also need to consider the brand behind this particular fund management company. And you can all agree with me that CIC is a very powerful brand in our society here in Kenya, both in terms of insurance, medical care, and now the asset management business, where we are doing quite well. And we thank God for this and our existing clients. And for all of us who are not yet in this fund, you're missing out on the goodies. So why unit trusts? We recommend our unit trusts because it offers you diversification. Like I told you, we place clients deposits in different assets, and that's it makes our fund quite stable because of the shocks that we might able to face in the market from time to time. And so this gives you a well-balanced portfolio that will guarantee you balanced return. Of course, you'll have access to expert opinion. Looking at our fund, all the decisions are backed by research and analysis, just to make sure that there's no guesswork that goes on behind the scenes. And you can be sure with CIC, your home. I spoke about the flexibility of this fund. You can put in your money starting at as little as 5,000 shillings and continue just topping up whenever you have surplus funds in your wallet. The fund is very liquid, and we try to really work on our clients' withdrawals because we know our clients save money to meet certain needs in future. And so when that time comes, we gladly liquidate your funds and wire the cash to your bank accounts within 2 to 4 working days. This fund is very transparent. We communicate to our clients from time to time. We share information via statements, via phone calls, via visits, and every once in a year we also invite our clients to come for AGMs where we just have a discussion with them, sharing with them how the fund has performed over the last 12 months and what we expect to see from our fund going forward. In terms of returns, like we've seen, the fund is very competitive. The returns are very good, and it's something that I would want all of us to just partake. Like I said, the entry points are very, very low. 5,000 shillings is a fair entry point for all of us, with a top-up, regular top-up of 1,000 shillings and above whenever you have money. So what are we saying? Don't let your money sit in an asset that is not in any new interest or a return. So let's make our money work for us. At the end of the day, we grow our wealth. So use our money market fund to grow your wealth. Use our money market fund to help you achieve your financial goals in life, say education, retirement plans, setting aside money for emergencies, etc., etc., and the list can go on and on and on. So how do you get to invest? We have 3 categories of clients. Category number 1 is a retail client or an individual client. Category number 2 is joint account holders, say a spouse coming together, or siblings coming together, or friends coming together. So those are retail clients, and all you need to do is just to complete an investment application form, and you just need to attach or upload a passport size photo, both sides of your national ID or a valid passport, copy of your KRA PIN, and once that is done, we also require you to attach a proof of a bank account, which means we need you to prove that you have a bank account. This can be done by either providing a copy of bank statement, a cancelled check leaf, or a copy of ATM card. Why do we ask for proof of bank account? This is because we don't handle cash as an institution and as per our regulations. And so at the point of liquidating your funds, the money will only be sent back to your bank account without having cash intervention. We also have corporate clients who will fill the same investment application form. We will require at least 3 signatories to do this and append their signatures. Signatories will provide passports. The signatories, will be required to provide a passport size photo each and a copy of their national IDs, both sides, or valid passports. For the institution, we'll ask you to provide a KRA PIN for the institution. We'll also ask you for a proof of bank account for the same reason as for the retail clients. We'll ask you for a copy of registration of a copy of the certificate of incorporation or certificates of registration. And finally, an excerpt of minutes or a letter of resolution to invest in this particular fund. You don't have to sweat trying to look for these forms. They are available on our website. As intermediaries, we are also able to share this a link that can allow you to just self-onboard into the fund. For our clients who are not tech savvy, we'll visit you and take you through the onboarding exercise together as we also upload these documents. So I have spoken about topping up. What I need to just, as I finish my presentation, is how to deposit the money. Deposits can be done via M-Pesa if these are within the M-Pesa limits. And our pay bill is there, 600118. And it's important for our clients to know that no more Safaricom charges will apply. Alternatively, you'll use our bank account details, which are Cooperative Bank. The account is given there. The account name is CIC Unit Trust Collection Account. And you can do a standing order with your bank. You can do an EFT, RTGS checks, PesaLink, or alternatively, if you have cash, you can just walk into your nearest cooperative bank and deposit to that particular account. And with that, I come to the end of my presentation. Claire?
Thank you so much for that very incisive presentation, Moses. Now, there are so many questions, and I'll want us to get into them. But I think one of the things that has stood out is that it's very important for investors to understand that the interest is compounded daily and then credited monthly. So your principal each month is going to be different. If you can go back to that slide, just so people can remind themselves, if you started with that 1 million, it will be like 1,008,000 the following month. So it's important to understand that, because sometimes people ask themselves, how is this compounding? How does it work? So it's compounded daily, that interest, and then it's credited monthly. So you see there, you started at 1 million, then it goes to 1,008,000, and then if you do nothing, that 1 million will be 110, 203. And then remember, Moses mentioned that 15% withholding tax. But just as much as he said, if you do nothing with that money, if you don't add anything, you'll get that amount. We always encourage you, and even in Aloojani, we say you just need to add money. The whole idea of growing wealth is that you need to put in some money every month, or however regularly works for you. And just the way he had shown that slide, the different ways of doing it, a standing order can work the best, because sometimes these things escape you, and then you're like, oh yes, I was supposed to put money in my CIC account, and it totally evades you. So one of the best ways of doing it is through a standing order, a monthly standing order. And if you want to open the account, Moses has shown us all the ways we can do it, but also Aloojani can take you through this journey. If you are part of the community, they can help you start your CIC Money Market Fund. And in the comment section, there is a link to the Telegram channel. So you can join there for more insights and just help and join that community. Remember, as I started this webinar, I was talking to you about that 1 milli challenge. We want to make it happen. And the only way we can make it happen is if we are regularly putting money towards our wealth creation. So if you're not starting with that 1 million shillings, it's okay. Moses has told us we can start with as little as 5,000 and then keep on topping up. And then that 1 million shillings will become a reality. But you need to be consistent. So I always like to tell people, don't just say, I've opened a money market fund. I'm one of the few people in Kenya who has a money market fund, and then you just opened it for 5,000 and you left it there. No, you have to be consistent. So you put that 5,000, then that USSD or the account number or the RTGS. There are so many ways. And I like CIC has made it so easy for us. If we don't have time to go to the bank, we can do the M-Pesa. If we don't have time for that, if you don't want to use that, there are so many ways. So please be consistent with that. Now, there are so many questions, and I want us to go through them. And I've realized a lot of the questions are on that dollar fund. So Moses and Humphrey, I'd like you to take us through this dollar fund and the questions that some of our listeners are asking. And one of the questions that was being asked here, I'll locate it again, but they were asking you talk about 5,000 shillings as the starting amount to put. Does that mean if I'm investing in the dollar fund, I'm putting an equivalent of 5,000 Kenya shillings? Or how much do I start with for the dollar fund. So is it an equivalent, whether it's, I don't know, $40, or is there a different amount of dollars that I need to start my dollar fund with? I'll direct that question to you, Humphrey, then I'll rope you in, Moses, to the other questions.
Thank you, Claire. So the minimum amount for the dollar fund is $1,000 to invest, and you need to invest that money in US dollars. It is more advantageous for you to have already purchased dollars and have a dollar account, and then that way you can invest into and out of the fund in that particular currency. If you try to do it from your Kenya shillings account, you will suffer unnecessary conversions at a very disadvantageous rate. The other thing to confirm is that all rates being quoted are net of all fees, all custodian charges, and all commissions if applicable. But of course, tax situations are personal, and withholding tax will apply to most. Thank you, Claire.
Okay, thank you for that clarification. So for the person who asked about the minimum for the dollar fund, it's $1,000. And remember that there's those conversion losses. So it's more ideal to just put it in dollars rather than converting. Now, there is another question here from Justin. There are quite a bit, as I've said, about the dollar MMF. There's so much interest in it. Justin is asking, is interest earned on the dollar MMF monthly, just like the Kenya shillings MMF, Moses?
Yeah, thank you for your questions. And just to reiterate something, interest on the money market fund accrues on a daily basis, and it's compounded at the end of the month. And the same applies to the USD money market fund. Interest accrues daily and compounded at the end of the month.
Okay, thank you for that. Another question here. Let me see this. Mike is asking, could you explain the 15% withholding tax and how it works? And the interest is 11%. I think it's very important. Remember, I was talking about how people look at raw figures. So you need to understand that the 15% is taxed on that you see that 110,000 down there. But Moses, just clarify for Mike, because he's not quite understood that 15% withholding tax versus the 11.02% interest that he's earning. So just clarify for people so that they don't take it in raw terms.
Thank you, Claire, for your question. Withholding tax is basically charged on the interest that you earn. Like I said, your principal will never be touched. The only thing that will happen to your principal is that it will grow organically or even by way of you topping up. And so just getting deep into the numbers, the interest on 1 million shillings, like we can see on my tabulation there, is interest earned from 1 million shillings for a period of 12 months. So the 15% withholding tax will be charged on the 110,000 shillings. So your net return after tax will be 93,000 shillings or thereabout. So your total fund value will be 1,093,000 shillings. I think that's clear.
Yes, that's clear. Thank you for that. And thanks for that question, Mike, because there might be other listeners who are also thinking the same thing and they're just wondering how it works. So thanks for that clarification. Now, Washu is asking, and this is a good question, actually, considering the multiple uses MMFs can have, you showed us there, we're talking about retiring. I saw a nice yacht there. I'd love to retire to a yacht as well. People who are saving for education, others who want to purchase maybe a car, start a business, that sinking fund. If you're getting married, start that sinking fund and whatnot. Now, considering there are multiple users, is it advisable to have multiple accounts for each of the targeted users, or is it better to have one account? I think that's a good question. Moses, maybe you can tell us a little bit about that. Is it good to have multiple, or should we just all consolidate it in one of those CIC money market funds?
Thank you very much, Claire. We recommend that you have multiple accounts, each taking care of each goal. And this will allow you to invest rather to do targeted investing, whereby you know the purpose of each fund and the end game. So our recommendation is that you can have as many accounts as you can to take care of your various goals.
Okay, thank you for that. I hope you've understood that, Washu. Now, there's a question here, Nyerere, that was about the minimum for the USD MMF, and it's been clarified. It's $1,000. Thanks for that. There is a client here who is sending some praises. Evans says, thank you, CIC. I am one of your clients for insurance. Thank you for that good feedback. There's a question here. Maybe you can talk to Evans, who is talking about a query on mortgages and maybe how he can use that money market fund maybe to save for those payments. He's saying, my query is on mortgages. Do you deal with such? And also on money market funds, what if I invest, say, 100,000 shillings? What is my expected return per month? So now he wants to know, for 100,000, you showed for us what 1 million would look like. So he's just trying to think, okay, if I start with 100,000, what does that look like? And how can you advise him about the mortgages and maybe how he can use the money market fund from CIC to cater for that? Humphrey.
Yes, so if you invest $100,000, the economics of it will be similar to this 100,000 shillings. Sorry, you'll end up with about 10,000 shillings. So basically, interest is charged on the balance that is applicable on the balance that is invested in the fund. The other thing that's important to note is that the interest is paid monthly and it is automatically rolled over into your account. And therefore, you end up having a very powerful compounding effect in that. And one does not need to have any intervention to have that interest automatically paid in. I think at the time of joining in or opening the account, you will elect your option, and then that will automatically apply for as long as you're invested. Thank you, Claire.
Thank you for that. Yes, the power of compounding. It just automatically every month you see that. Now, there is somebody here and you mentioned it, Moses, about and Humphrey as well, about the management fee. Wanjiru Kimani is asking, what is the management fee? And I think you clarified that this 11.02% is net. So you're not going to deduct any of the management fee or any other cost. So it's net. When you talk about 11.02%, that is what you're getting. So maybe you can just reassure Wanjiru, Moses.
Thank you, Claire and Wanjiru. And yes, I want to confirm that 11.02% is net of our management fee, which is recovered before we declare this return. Rather, it's a silent fee of about 2% per annum.
Okay, thanks for that.
And that fee is charged on your interest only, not on your principal.
Okay, thank you for that. Now, another question on this dollar MMF. I think you've answered quite a number of them, but is there any other requirement other than what you showed us for the individuals and the companies that is required when starting the dollar MMF? Justin is asking, do I need anything else, or is the same thing, all these requirements that are on our screen there, is it the same for the dollar MMF, or is there something else that would be needed?
The only difference there is the proof of bank account. For when you're joining the USD money market fund, we'll ask you to provide proof of ownership of a USD account, because we'll expect you to wire funds in USD. And when you do a liquidation, we'll also wire funds back to USD, to a USD account. So for the Kenya shilling money market fund, we'll only ask you for a Kenya shilling or a Kenya shilling bank account. For USD money market fund, we'll ask you for a proof of a USD bank account.
Okay, thanks for that. So remember, just the way Humphrey said, those conversion losses, you don't want them. So for the dollar MMF, you need a dollar account. So thanks for that. Now, there's another person here who is praising CIC, Derek Kiremi, saying, thanks for the information. I'm a proud member. Secondly, remember to talk about the million making process. I think he's referring to that 1 million challenge that I talked about earlier. I had talked about Aloojani has a 1 million shilling challenge. So the idea is to save up and to grow your investments to get to that 1 million bob. And they have a community right now. Aloojani is in its 52nd personal finance class, and there's so much that is being talked about, and it really is a community where you really have accountability with other people in the group. So if you want to reach that 1 million challenge, sometimes it's really hard if you're doing things by yourself. But when you're in a community of other like-minded people who are interested in growing their finances, then it becomes easier to grow. So as we've been shown here, CIC money market funds is one of the ways that you can keep on growing your wealth. You saw that 1 million that accumulated after 12 months to another 110,000, and then you remove that withholding tax. So it's really a challenge to grow your assets to 1 million shillings. And so I'll be talking a little bit more about that at the end of this webinar, but I want us to get through as many questions as possible because I can see you have so many questions in the question box. There's the same ones on money market, the dollar ones that have been answered. Oh yeah, there's a good one here. Moses, you can talk a little bit about that. Hesbon is asking, does CIC have an equity money market funds? Remember, Humphrey talked to us about thinking about your diversification, thinking about your investment horizon, high risk, medium risk, low risk. And we've established that the money market funds are really low risk. But if this Hesbon is interested in an equity money market fund, talk to us a little bit about that.
Thank you, Claire, for that question. And yes, we do have an equity fund, and point of correction, it's not an equity money market fund. It's just an equity fund. So yes, we do have an equity fund. And just to take you back, unit trust is just the general terminology of the funds that we run. And under that umbrella of unit trust, we have different types of funds. And of course, these funds are based on the principle of risk versus return. Now, when you look at the subject of discussion today, the money market fund is a low risk fund. And you can be sure the other funds in our stable, have graduated risk inherent in them. So just to touch on these funds, we have, other than the money market funds, where we have the USD money market fund and the Kenya shilling money market fund, we have the equity fund, which Esbon is asking about. And this is basically a mixture of selected quoted stocks at the Nairobi Securities Exchange. And of course, this is a fund that is tailored for a client who is willing to take a long-term investment horizon. We recommend over 10 years of investment. And the reason why we recommend a long-term investment horizon is because we expect to see shocks along the way. And as we have all seen in the recent past, like the last 3 or 4 years, our stock market has really been on a downward trajectory. And this is basically driven by market dynamics. And that's why we find ourselves where we are. So the question, maybe if we get to a one-on-one session with Esbon, would be asking him whether he'll be willing to take that investment risk, whereby at some point, the value of your investment will come down owing to the depreciation of the underlying assets. These depreciating assets being stocks. So those are some of the dynamics we need to also get to understand as we look at the other product offerings. We also have the fixed income fund, which is basically a bond fund, a fund we place clients' deposits in a mixture of bonds in the market, We have short-term bonds, medium-term bonds, and long-term bonds. And so these also come with their own inherent risk profile. We also have the balance fund, which is now a mixture of portfolios. We'll have taken some positions in the stock market, some money put in the bonds, some money put in short-term debt assets like what we invest in the money market fund, just to create a balanced portfolio. But we need to remember the three funds that I'm speaking about, the equity fund, the balance fund, and the fixed income fund, come with such investment risks. But this doesn't mean that your money is going to go, is going to get lost. The losses or depreciation we see in these particular funds is only on paper. The gains are also in paper. So you only actualize a gain or a loss once you liquidate your assets. Otherwise, for our clients who invest in equity fund, we recommend that when prices come down, continue putting in more money. What will you basically be doing? You'll be lowering your holding cost, assuming you came in at a time when the value or the price of the equity fund was at 10 shillings and it's come down to 7 shillings. What do? Do you take off? No. You continue holding on to this fund and by way of putting in more. So if you put in an equivalent amount of money like the one you had put initially, you will have brought down your holding cost from 10 shillings to about 8 shillings. And so by you continuously topping up on your investment, it means when the fund starts going up, you'll quickly break even because you've continuously been bringing down your holding cost. And so an appreciation in the value of your fund means that your break-even point comes sooner than later, other than just holding on to 10 shillings for another 5 years waiting for break-even. It's important for you to continue just topping up whenever you have surplus funds to do so. But key word there is these funds are meant for a client who is going to take a long-term investment horizon, and two, a client who won't be worried about the constant shocks in the market. Otherwise, if those two will worry you, let's stick to the money market fund.
Okay, thank you so much for that. I'm sure, Hesbon, you've understood that and you can get further clarification on that. So take into consideration the time horizon. Now, our time is moving really fast. There's so many other questions, but I'd like us to get closing comments. And a lot of the questions have been answered that were on the chat box. So I'll start with you, Moses. Just give us your closing remarks on the CIC Money Market Fund and what investors should look forward to.
Thank you very much, Claire, and our participants this evening. Number one, I want to just assure our clients that CIC Money Market Fund is the best in the industry, and it will continue being the best in the industry because we intend to just not stop here, but keep on doing what we've been doing just to make sure that our fund remains competitive. Number two, I want to also beseech our clients out there, as you are looking for a investment partner, especially in the money market fund, look at the experience of the fund manager that you'd want to partner with. Do they have a track record? Do they have a good name in the market? And of course, the brand. We want to create a brand loyalty around CIC Money Market Fund and the entire brand of CIC Group. So these are important things to look at when you're considering investing in a money market fund. And finally, for our participants who are not clients as we speak, you can start your journey tonight. We have electronic platforms for self-onboarding. You can start your journey tonight. We have electronic platforms for self-onboarding. You can start your journey tonight. We have electronic platforms for self-onboarding. You can start your journey tonight. We have electronic platforms for self-onboarding. You can start your journey tonight. We have platforms for You can also reach out to Aloojani and myself. I think I gave my contact details, and we'll help you start your investment journey. And we promise you nothing but the best experience ever in your investment journey. And with that, I want to most sincerely thank you, our participants, Aloojani, Claire, and our MD for making this webinar a success tonight. Thank you, and back to you, Claire.
Thank you so much for that. And as Moses said, you can start your journey tonight. Please just pull up that slide of the ways that you can get in touch with CIC, whether it's on web, whether it's through M-Pesa and whatnot, so that people can actually act. As we said, you need to act. You've taken in this information, but you need to act. We want you to start building your wealth basket in the money market fund. And CIC is a market leader. We've seen 35% of the market. We've seen their assets under management. So this is a company, a brand that is trustworthy. So you need to start that journey. Thank you for that, Moses. And Humphrey, kindly give us your closing comments.
Thank you, Claire. Just to reiterate my colleagues' sentiments, we are at the top in the market because of the trust that you have placed with us, and that trust is well placed. And we'd also like to wish you all the best in your journey towards financial security and financial freedom, and we'd like to continue to partner with you in that journey. I'd like you to remember our heritage and our tagline: we keep our word. So you're invested in a group that is strong, that is stable, that has got the pedigree, and the group keeps its word. Thank you, and back to you, Claire.
Thank you so much. We keep our word. That's very important. Trust the brand. Thank you so much for that. And before I hand over to our host, Aloojani, I want to remind you, as Moses and Humphrey have said, that there's so many ways to start your journey, even tonight. And Aloojani can also help you with that. On the chat section, there is the email, learning@aloojani.com. They can direct you. They can help you in your investment journey. As I mentioned earlier, Aloojani is in its 52nd personal finance class, where people have a community of like-minded people who are trying to grow their wealth. And I'd like to also tell you about a summit that is coming up next month on the 25th of November. You cannot afford to miss it. There's been already so much interest in it. There are only 300 seats. So if you start booking your slot now, the sooner the better. There's going to be so much learning over there. SACCOs, real estate. We've been seeing what's been happening in the news right now. How do we ensure that we get it right when it comes to real estate, money market funds, and every other wealth basket that you can think of? Aloojani is going to be having experts during that summit that's going to be happening at the Radisson Blu next month on the 25th of November. And remember, as I started, that 1 milli challenge, you can do it. You can do it, okay? And it starts with action. So you've taken in everything now. We've learned what CIC can do for us. Now it's up to you to make that move. Put that money in. Start your journey. Remember, that journey of 1,000 miles starts with that one step. So start your journey, and then that 1 milli challenge will not look as huge as it is. Remember, it starts with 5,000 shillings for the Kenya shillings money market fund, $1,000 for the dollar fund. Start your journey now, and then we will be talking a totally different story 6 months from now, 12 months from now. And remember that thing that Humphrey said, time. Time is your greatest asset. So don't put it off to tomorrow, to next month, January, as you're doing your to-do list and my New Year's resolution. Start today. So at this point, I'd like to hand over to Robert Aloojani, just to give your closing remarks as we close this session.
Good evening, and thank you very much, Claire.
Thank you for that. Our time is well spent. So remember, you can start your journey today. It's very simple. Whether you are tech savvy and you just want to go onto the internet, CIC website is a place to go. If you want somebody to come to you to help you start your journey, Moses told us that they are with you. They are going to help you, and they keep their word. So they've said that they can help you start this journey. They will walk with you. They have said that 2 to 4 working days, if you need that money, you can be able to get it. They've said 11.02% net of all the fees. They keep their word. So my challenge to you is to start today. Don't put it off. It's been quite an enlightening discussion. Thank you so much, Moses. Thank you so much, Humphrey, for your time and your insights on this building wealth baskets. I think we have learned so much and we just need to act now. Robert, did you have anything else to say, or you're good?
Yeah, so thank you very much, CICAM team, for coming to share with the community of investors this very insightful webinar. And thank you, Claire, for the great moderation. So I hope people in our community see the power of working with established brands. It's just for you to get the information from the primary sources. Then now you can make it work in your personal situation. Like you always say, personal finance is very personal, but it's important that you empower yourself with education. And also my encouragement to CIC Asset Management is that the more we do this, the more we'll be countering the competitors who are the scammers who are having an easy time in the market, since they're the people who tend to have a lot of time with investors. So if we continue doing this, I believe we'll do well. And we've already seen a lot of people in Aloojani community doing 1 million challenge and doing it successfully and seeing it practically. So I believe if we continue this way, we'll succeed. When it comes to the holiday season, we'll have money for going for holiday. When it's school fees time, we'll have it. And a few years from now, we'll have home ownership wealth baskets, financial freedom wealth basket. And actually, this is the best part of financial markets. I usually tell people that where you get money is the best part of financial markets. And we are just getting started from an innovation point of view. So thank you, everyone, once more for joining. And we look forward to having you on the 25th of next month. We'll be holding our annual Economic Empowerment Conference at the Radisson Blu. And we hope to have insightful speakers who will again give you more knowledge. So thank you, Humphrey and team. Thank you, Claire, and bye, everyone.
Thank you.
Thank you. Good evening.